But Sampath Reddy too joins in on the show with his thoughts on the markets. Sampath, hi, afternoon. Good to have you on the show. I guess, Sampath, everyone wants to know how much more pain and has the time to start buying, at least into large caps, come yet or not?
Right. I think, from the peak, large caps have come down about 12-13%, and in mid and small cap, more or less about 20% fall has been there. I think, we have somewhat come to the, fairly attractive level, I would say. Of late, some large caps have also got, taken a hit because of, the reciprocal taxes by the, Trump administration, etc. Some of the sectors like which we used to like quite a bit, for example, pharmaceutical has also quite beaten down quite, sharply. I think most of these sectors have now come to a very attractive, valuations, especially in the large cap segment. Mid and small cap, more so in the mid cap side, maybe some more pain could be left, but I think large cap have come to a very attractive levels.
The take coming in on where the market may be headed right now, and pharma seems to be one island of safety perhaps. But Naresh, I wanted your thoughts on IT and how much more weakness do you further see? And would there be any IT stocks that you would be willing to short now?
So a bunch of them are breaking down today, so could continue to drift lower. So something like Tech Mahindra, which was holding on above the 1600 mark for the last 6-8 months, has broken down. Even if you look at the larger names like Infosys, finally below the 1800 mark. So they could all drift another 5-7% lower at least.
Okay, that's the take coming in on IT. Could expect some more weakness. But Kunal, let's pick up on some of these large cap banks. ICICI Bank, today itself at the session lows, I think it was down about 2%. It's bounced a little bit from there. And then IndusInd, what do you foresee on the charts for these two?
I think ICICI Bank is a stock which has recently gotten a little bit weak on the charts. The stock, even today, I think right at the start, managed to trade below its longer term average. And this is a break after almost month for ICICI Bank. And then when you try and look at this over the last 4-5 months from the September highs, the stock is showing signs of weakness very recently. So which means that there could be a case where ICICI Bank could start to underperform from a short-term bit. But I believe IndusInd Bank could be a different chart altogether. The stock is showing signs of resilience. The major part of the pain seems to be out for IndusInd Bank. The stock is forming a RSI divergence setup. When we look at this in terms of the price reactivity with respect to the market trends, especially on the days when the Bank Nifty is down 1.5%, 1% to 2% range, IndusInd Bank generally tries to outperform, and then the fall is much lesser than the benchmark index, in that case Bank Nifty. So I think that's a sign of potential relative strength building up for IndusInd Bank. I would expect that the stock, once that breaks out of the 1080 mark, I think could start off to be into a much more stronger uptrend. So IndusInd Bank so far looks relatively strong as compared to the other names in the private sector banking stocks.
Sampath, other than pharma, where else are you seeing some spots of opportunity? Many are calling banks, and in fact, the entire financial cluster right now are looking ripe in terms of valuations as well. Any opportunities you're spotting here?
In the banking as such, valuations are very, very attractive. We have been liking the large private sector banks. They're trading at a significant discount to what they used to trade at about 3 to 5 years back. And also the asset quality and the growth looks quite good for these banks. Within the overall BFSI space, we've been liking the large private sector banks. There are some stress or pains in the overall in the BFSI space. Maybe for instance, if you look at the microfinance and unsecured lending, there is a pain, and also probably even the capital marketplace, which have had a very good run in the last few years on the back of huge growth in the volumes in the market, in the stock market, have also done very well. Maybe they are also slightly richly valued, but overall in the BFSI space, the lending side of it, we like them. We like the large private banks much better vis-a-vis any of the other BFSI space.
Interesting. That's the take coming in on banks right now. Just looking at some of the movers today. So yes, there are dots of green within the pharma pack. A Glenmark, for instance, is looking good. There's DRL, which is also holding up in trade. Other than that, you are seeing also some, spots of opportunity when it comes to a VBL, for instance. Look at Bata, that's holding up 3% right now. United Spirits as well is looking good by about almost 2.7%. And then, of course, there are names like Aloris Labs, etc., also which are holding out. Nestle, Tata Consumer, these are also spaces which are seeing some dots of green, or names rather. Sampath, what about the traditional staples? Has time come to buy them just yet, or would you think that this is just a tactical play right now?
I think the traditional staples are coming to the attractive zone. They're still slightly away from the I would say an attractive PE multiple, somewhat about 35 to 40 is really a fairly good multiple for these stable companies which used to enjoy for a long period of time. If you look at current valuations, they may be about 10% away from these levels. So I think staples is one of the place where one could stay invested, at least given in this market, as we believe that overall some sort of a pain left in the market as such. Given that view, I think consumer staples will be a better place to hide, at least for the near term. And also with another 5-10% correction in these stocks, they will again come to a really attractive zone.
That's the take coming in on the staples then. But amidst this market, what we are seeing is that some of these stocks are definitely holding well, and case in point being Bata. And Kunal, if you can help us with your chart check on this one, because there's actually no significant news flow in this one. But just on Friday, when the markets were trending lower, the stock held up. Even today, a 2% jump. What do you make out of it?
I think the only reason for that is Bata is going out of FNO. This is the last, this is the last series for the stock on the FNO side. So there's bound to be compulsion of closing of positions, and traders who've been short into the stock, they would not, of course, want to convert this, because then they will have to take delivery of the stock, or have to give delivery in this case for carrying off short positions. So I think in that sense, I think this could be a more of a mandatory closing for the short positions, and I think that's why you're seeing the stock up higher. I think we've seen broadly that Bata is a stock which has been a huge underperformer over the last 1.5 odd year. I remember, I think the stock was almost at 2,000, 2,200 levels somewhere in 2021-22, and from there the stock has been consistently forming a pattern of lower highs and lower lows on the long-term charts. I'm talking of it on the monthly basis. So the stock is into a major downtrend, but on the short-term wise, it's just that because of the adjustment on the technical side, you're seeing the stock recovering and then showing some sort of short covering rally.
So because of these adjustments, maybe Bata is seen to have a good move. But other than that, some of the other securities that could get affected, case in point being Canfin Homes, as well as India Mart, Ipca Labs is what I can spot in this particular list. But other than that, what we see is that some of these companies, basically from the food and beverage sector, stock like Varun Beverages, they are holding on to the gains of almost 4%. What do you make out of this one, Kunal?
So Varun Beverages could be an interesting case. The stock has fallen from 620 plus levels very recently to a sub 500 mark. I think in the morning the stock was almost at 470, 475 kind of a level, and it's recovered quite well on an intraday basis also. Looks attractive, and I sense that the major part of the pain seems to be out. In fact, in this last leg of price correction for Varun Beverages, when the stock fell from I think 550 levels to sub 500 mark, the volumes were pretty much on the higher side. And generally, when you see such kind of a sharp volume and then the intensity of the price correction drops down, you expect that the stock gets into a gradual recovery, as well as at least a stability gets formed. So base formations generally happen when you see strong volume formations into stock prices. I would believe that that could be a case for Varun Beverages. So maybe not a buy on an immediate basis because of the momentum lacking in the markets, but I believe if it comes back to say 475, 480 kind of a territory, it could be a good contra buy.
All right, that's the take coming in on Varun Beverages, once again rescaling to that 500 mark for itself. But in the last half an hour or so, what we have seen is a good move on stock like Happiest Mind, because if we pull up the intraday chart, it's a 8% jump coming in on Happiest Minds, one of the top gainers in NSE 500. Naresh, if you can help us with your chart check on this one, because on an intraday, it's a 55 rupees move on this one. Is this also supported by a good volumes, and what do you make out of it?
So the stock has been in the downtrend and has seen a similar few ticks in the last few sessions. Not a large volume tick as such. Could be a single trade.
It just could be a single trade, nothing much to read when it comes to Happiest Minds, but a good jump, what I could say, is 8% on an intraday basis. But other than that, Star Cement was actually other counter, which was in focus on the back of a brokerage note, where an Antique is highlighting that going ahead in Q4, the EBITDA per ton could actually jump by 40% given the expansion or the new capacities from northeastern side, helping in fueling the company's growth. Other than that, the cost efficiency methods can also help the company overall. And in the cement pack, we are seeing positive notes also highlighting that the price stability is finally through and the price increases are sustaining for this particular sector. Sampath, help us with your reading on the cement pack and any particular stock that is looking attractive to you at this point?
I think cement also has been going through the rough phase overall in this financial year. So far, if you see the 9 months results, most companies have shown a significant decline in EBITDA and even PAT level. Substantial decline was there in the cement companies. Even if, largely that is because of realizations have been relatively weak and the cost inflation continues to be there. So overall EBITDA per ton for across the board has, been sub 1,000 rupees per ton for most cement companies. And unless, the EBITDA per ton goes above 1,200 rupees per ton or so, unless you are visualizing that scenario in the next 3 to 6 months, cement stocks probably will still, remain underperformers in my view. And even at a replacement cost basis, most cement companies are trading at a substantial premium to the replacement value. So overall in the downturn, stocks generally go to as low as the replacement cost, a slight premium to the replacement cost. Vis-a-vis, if you see in the current downturn in terms of profitability wise, they're still way above the replacement cost. And with that, I think, because of this, as the relations continues to be weak, capacity expansions continues to be going on a full swing, don't see a, demand supply situation easing for the cement producers in a hurry. Maybe, better times ahead for, cement companies. Maybe we could wait for some more, correction in the cement sector for better results.
Sampath, what about, the erstwhile PSC favorites, if you will, your railway and defense names? That's where the first signs of correction began, mid last year itself. But what do you do about them now, given that most of them have fallen, more than 30-40% apiece?
I think, we still continue to think that, valuations are too rich in the case of, the PSUs, which are predominantly the defense and rail sector exposed companies. For most of these companies, the business comes from broadly in a single client or a couple of clients. And, just that today we are getting we are seeing a good amount of growth in terms of order inflows for most of these companies. The stock prices have gone really through the roof in terms of valuations wise. And, and given the way the budget focus, which has been there broadly, the capex side has also been slightly moderate, keeping those things in view, I think, there's a long way ahead for these companies in terms of correction.
But with this, just 5 minutes left for the markets to shut shop, and let's start taking some of the BTST ideas from our experts. Then, and Kunal, you go first. Tell us, which stock are you eyeing?
So I'll go with two sell calls and individual names where the stock has shown signs of weakness. So the first one is a sell on Info Edge, the stock showing signs of weakness, breaking below the 200 DMA. So look out for targets in the range of 7,000, stop loss at 7,300. And Prestige is the other stock. That stock has confirmed a break of its previous major swing lows, breaking below the, I think, the January or the February lows very recently made. That was around the 1200, 1220 mark. So look out for targets in the range of 1150, stop loss at 1220.
All right, one buy and one sell from Kunal. But Naresh, what about you?
Buy and a sell from me too. First is a buy on M&M with a stop loss at 2690, target price of 2750. Second is a sell on Tech Mahindra, which has broken down below that 1600 mark, stop loss at 1630, target price of 1580.